Good night, everyone. Today is Thursday around 9:30 p.m. New York time, and we're gonna go with our daily technical video day, guys. Today we have the market is being in a corrective move after the move that we saw in the market yesterday. Today we've been, technically speaking, we've been very quiet. We have a trade waiting for the market to get to us, but I mean, other than that, we took the long Aussie dollar today on the trading room, and we closed it. So technically speaking, we haven't done anything. Now, there is a reason why, and it's because we believe that the market is in a corrective move, and we don't like to trade contra trade. So we would rather wait for the trend, and we wait for the correction to be over, and then we ride the trade within the wave C of the market. Now, let's start with the dollar right here. As you guys see, the dollar did a 1, 2, 1, 2, 3, 4, 5. This is 3 and 4 and a 5. So it's a very modest wave, a complete wave with a great separation between wave 1 or 3. Now, what we are expecting, we believe that the dollar already ended the wave A. We are in B, and then the dollar is going to trade later on today in London. The dollar is going to trade lower to then start buying the dollar again around levels like, let me give you levels when the dollar needs to get by around 74, 73.80 area. That's a good place to start buying the dollar, and even 74 area. I mean, because of the distance of the wave A, we believe that the dollar now should trade higher, either to 2074.25, 74.78, and then the dollar needs to correct lower, like I say, to one of the levels that I mentioned, either 73.93 or can go to 73.97 area. So keep that in mind, guys, for today in the dollar. Now, oil is within the proposal wave C in oil, and it looks like it needs to correct a little bit here before going lower. That's oil, but oil overall we believe is going to be dropping. Now let me show you the dollar in a 4 hour. We have adjusted the count a little bit because of the S&P, guys. Let me explain to you guys what is the thinking behind. The thing is that if this is either a flat or is a double zigzag, we need to trade about 76.70 area. Now, that's okay if you look only at the dollar, but if you look around and you look at overall market correlation sheet, that's telling you that that's not the case, because the S&P, like I'm gonna show you, is where a bounce into the E wave, the C wave of E, that making the case for the dollar do not gonna have, playing the correlation of the S&P, the dollar do not gonna have that bounce that we were expecting. Now, having said that, let me tell you something. There is nothing wrong, you know what it means, nothing wrong to taking this long dollar. That's the one that we waiting on the service to take. Why? Because if the biggest move, we find. If it's the small move, we're gonna be fine, and we're gonna be able to know which one of the two moves is that one, either the bigger or the small move. Right? Now, let me get back to the individual pairs before we keep going. Let me get back to the individual pair. Okay, guys, this is the euro dollar. This is what I believe we are right now. We just ended the B, and we're gonna go high in C. Which area? Around this area. This high of 43, 43.90, 43, 44 area should be good. I would say 43 43.95 is that the 50% retracement within from the move to the from here. That should be a huge area. Now if this low hold, we need to look also at an area around 43.80 when the equal list comes around. Now that's the euro in and 1 hour. We have changed a little bit the euro in the 4 hour, due, like I say, in the case of the dollar, because we believe that the S&P is way ahead of the dollar, and then we believe that the next move target should be around 141.02, 140 in extension. This area of support right here, here can provide a huge support right here in the dollar, in the euro dollar. Like I say, we're labeling this like a 1, 2, 3, 4, 5 type of leading diagonal, even though there were no overlapping. But well, let's see if that's the case. Still nothing wrong with to take the short around this area, because either wise the move is gonna be to the downside, and as an Elliott Wave agent, that's a move that needs to be taken. Now let's move on to the S&P. I explained to you guys the reason of my thinking. The reason of my thinking is this. Look at the S&P, how we're ahead it is. So we need at least 20 more pips to the downside on the S&P before the S&P become extremely bullish. And then I don't want to be in the bullish side, bullish dollar. I don't want to be bullish dollar with a bullish S&P. Maybe one day they can correlate, or they can break a correlation, but most of the time the S&P is an inverse correlation to the dollar, guys. Keep that in mind. Around nothing else really happens today that we have been no covering. We believe that the pound still got another high, very possible here. The drop right here looks corrective, and then we're given a chance to another correct another high right there. Let me show you the 1 hour so you guys know where I'm coming from. It's right here when you see 1, 2, 1, 2, 3, 4, 3 or 4, and then move to around 165 area before dropping. And technically, not the Aussie dollar. We have become now bullish Aussie dollar, and I believe that this is the count that he's following. Now the degree needs to be seen when we believe that the Aussie, it did a series of 1, 2, 1, 2, 1, 2 series, and now we are right here 1, 2, 3, 4. Is testing the 3802 of the area right here, very logical area to a bounce, but the correction here needs to bounce pretty well. There is a trend line channel here, because remember we also have the flat channel, the flat count, and if that channel is taken to the downside, that should be very bearish to the Aussie, and then the count with the flat is gonna get in place. Alright guys, so for tonight we see dollar index, and then a possible bounce and a possible dollar trend starting later on today in London, of the beginning of New York tomorrow. Thank you guys. Have everyone a good day.